All right. Technology is easy. Then we're working, bro. So I know you had a trade on this morning, and I know you've had a couple of ideas yesterday, Euro NZD, GBP JPY. You had a
Yeah.
couple of things on the table. I wanted to focus today on GBP AUD. So I'm going to flip my screen over so we can have everybody see everything. They can see
There it
both
is.
of us.
Yep.
Yeah, perfect. So you can see my screen, right, James?
I can, yes.
Cool. Why don't you walk us through what you were looking at on this GBP AUD this morning, and I'll do the analysis as you start talking. You want me to start on the 15-minute, or you want to
Okay,
start on the
perfect.
1 minute?
Yeah, 15 minutes good. So yeah, just walking through like GA yesterday, so at the start of the week, I actually caught a move earlier on before actually getting to the desk. I had a look at GA, and as it came into that upshift there on the 15-minute yesterday, so just after the Asian range finished, or coming off the Asian range low. No, previous day. Yeah, there it is there. So I actually caught a move there. I got in on the upshift, and then I added because there was a D1 in play there off that Asian range low, and I added in on the pullback, and I actually got about two and a half R. I took it up to my base exit was the Asian range high, just above the Asian range high. So I already knew from that the long bias is there, especially with the high time frames. On the 1 hour and 4 hour, I really like the high time frames on GA as well. If I do remember yesterday, it was looking really, really clean.
Yep. Well, I see it
Holding
here
the 50.
yesterday. Good market sentiment, holding the 50. Yep. Looks good on the 1 hour. On the 4
Yep.
hour, market sentiment is very bullish. Look how, dude, it's been bullish since the beginning of July.
Bro,
Look at that, bro.
yeah.
Wow.
Even the daily, look at how bullish the daily is as well.
Do you remember this day, bro? Not to get off topic. You remember
Yeah, I remember
remember
that.
that? Look at
Yeah,
that.
yeah,
Sick
yeah.
that Owanda pin, bro. What the hell is that? 1,000
Yeah.
pip pin.
I don't, Jeez, I've never seen that, to be honest.
It's
But
crazy,
yeah,
right?
so obviously the bullish, yeah, I've never seen that. But obviously the bullish bias is there. So coming into today, we get a dip down into the sell zone after that pullback yesterday, and now it's holding the bar zone. It was holding the bar zone nicely. So I know Jerome was in off the D1 off the 200 there today. But what I've been implementing now lately is waiting for that 50-minute upshift. I've just found very, very consistent results the last week and a bit. I've actually, yeah, today was my first loss in 10 trades.
Wow.
So I've had, yeah, so it was I had 9 wins in a row, and today was my first loss in 10 trades. So
Wow.
just waiting for that 50-minute upshift has really, really saved me a lot of money, because we know that if it gets into an upshift or downshift, obviously depending on which way we're trading, it should hold the EMAs and continue in the direction of trend. So I actually I saw the D1, but I waited for the candle at, so there was the shift, but I waited for the candle. I think it is at, so you get that big candle there, and then 1, 2, 3, 4, 5, the fifth candle afterwards. It chopped around a lot, and then I actually took it at the close of that candle. Yep, that one there.
Right
I
here.
took it at the
So
close of that candle.
let me
Yeah.
let me draw really quick so everybody can follow us. So what he's saying, I'm going to mark here with the vertical line, the candle right around where you took the entry. I'm going to go over here to the 1 minute
Yeah.
really quick. Erase the indicators. Oops. Nope. Erase the drawings. Like that. Mark this. And then what I'm going to show them is, did you draw the divergence like this from back here, or did you just draw it right here?
I drew it from back there, but I did focus more recently on the more recent divergence.
Okay. Just because I think either way,
Yeah.
it gives you the same thought, right? The
Yep.
thought is
Same. Exactly.
this is the bottom. This is where I don't want it to go underneath, right there. So as long as it holds
For sure.
188.65, you're like, okay, this should be bullish. If we sync this up
Correct.
just to the other side so everybody can see it, that's right here off the 200 EMA. And what I really like about this, and
Yep.
I like that Jerome is doing this too, a lot of people are doing this, they're taking the market sentiment line here in the buy zone all day, right? And they're saying, as long as I have that long bias and it's matched up on EMAs, matched up on the TDI, then I can look not just off the 50, I can look to buy it off this significant level. You and I have even done some trades
100%.
together where we're buying D1s like this, not off an EMA, but off a zone, just a zone alone, that we see it hit the zone, hit the zone, hit the zone, and then boom, you trade off that zone. It's the same thing as an EMA. People ask me all the time, they're like, what's more important? Is it EMAs or is it price action zones? And I tell them they're like basically the same thing. You know what I mean? To me, do you kind of see them the same way, or do you favor trading off EMAs versus trading off zones?
I do favor trading off the EMAs, but I do see them as the same thing. For me, EMAs are like moving zones, moving zones, because EMAs are exponential moving averages, so they're
Sure.
moving all the time. The
Right.
zones are moving as trends is moving. So obviously, yeah. So having said that, I see them as the same kind of. I mean, if you're trading off, like I think I remember I traded GJ off the previous day's low, as a D2, D1, whatever you want to call it.
Yeah.
But it's a significant level.
Exactly. I'm actually, this new project that I'm working on, I've told you a little bit about it. I have been trying not to talk about it too much, but in that, I was working on this section of it yesterday talking about key levels, because I think that was a big thing for me when I got into trading. I didn't understand what's more important, yesterday's high or high of week. What about yesterday's low? Today's low? What's important? How about Asia low? What's the, so I was actually working on that yesterday. So it's funny we talk about that, but let me keep going. So Jerome was looking for it here off the D1, off the 200. You're kind of using that same analysis here to give you that bottom on the 1 minute. So let me blow up the 1 minute now.
Yep.
Great structure on the 1 minute. Really, the only thing that it doesn't do that I would like it to do is come under the 50.
Retest.
Yeah, no, it holds above the 50 instead of actually coming underneath it. So as the morning developed, you took your entry, I would assume, let me just sync this up over here. Like that, so that way we can see that. So you were looking to take an entry somewhere right around here, I would guess, right?
Correct. Yep.
And tell us about the thought process there. You're seeing a higher low here. You've got the bottom here, right? Another higher low here. So you're looking to go long somewhere in here, right?
Yep. And now the 1 minute L50 is holding that bar zone steady. As well. It didn't come back into the sell zone. Yep.
Right there, crosses up, holds it here. It holds it. And then by the time it breaks down underneath it here, that's when I was up and I was watching it with you. And I was like, yo, if it does that, that's no good. And that was good to get out where you did, because you pulled the trade somewhere around here. And then look at what it does. It falls another 20 pips, Yeah.
So I actually saved myself some money there. Didn't take the full stop.
Yeah. Let's break this down, I think, because this is the most important piece. And this is why I wanted to talk to you about it. What I think when I see this is the way you traded it is the best possible way. And that's how I would have done it, bro. Because what you did was you waited for the 15-minute 8 and 21 EMA to cross up, and then you looked to took the entry on the 1 minute using the same structure, the same logic that you would normally take, right? But to me, like where Jerome did it down here, if you're buying this down here on the 15-minute, when you're in this downshift with the 8 and 21s cross down, like you said a few minutes ago, that to me dramatically decreases the probability of the setup. So to give everybody in Asfx that's watching this context, what are you grading this setup when you're trading? Not necessarily that you're trading long in the downshift because you're waiting for the downshift, but because it's coming from that position. Like, what do you grade it? Do you automatically call it a C? Like, what are your thoughts on that?
So personally, I don't give that if we're trading long and it's in a downshift, I don't take it as a knock, but I will size down on it. So I'll still give it, let's say there's just divergence. That's technically a B setup for me because there's only one knock. But if you're trading it while it's still in a downshift, you got to size down on it. And that's why actually I've just been trading while price gets in, if we're trading long, into that 50-minute upshift, because it, as we know, if it gets into that upshift and we're trading long, if it's going to work, it's got to hold those EMAs.
Exactly.
And it, as you say, it dramatically increases your probability, because you in that 50-minute upshift, if you actually just what I realized also is, if you actually just have the 8 and 21 EMAs on the 50-minute, look how many times with that perfect L50 they cross and actually work out. So when you're actually trading in that 50-minute upshift, obviously using G as an example, going long, it dramatically increases your probability of
making money,
of winning more trades.
Yeah, just make it, because I was just explaining this earlier when you were watching. That's exactly what I was saying, because like, for example, with Euro USD today, there hasn't really been a clean A1 entry other than this 2 candle formation, right? But let's just say, of course, this is not on edge, but let's just say you ended up getting short 20 minutes late. You're still making money today. You're still in profit because you're trading in the direction of the trend and in the direction of the short-term shift. And you have that perfect market sentiment. I think people will talk shit if they hear us talking about EMA crossovers, but I think the open-minded people, like all the guys that are doing well in ASFX, they understand that it's not just the EMA cross. It's when you have that cross and you have that perfect TDI. That TDI makes the biggest difference. That's what makes ASFX powerful.
Exactly.
So What would you do like this one with GBpNZD right now? Like this one has this perfect market sentiment line, right? It's in a downshift here. So would you wait for the shift up and then look to trade after the shift up rather than trying to snipe the bottom just to increase probabilities? Is that what you're basically saying?
Yep. So the only time I'll trade in a 50-minute downshift is if I'm taking it off on the 1 minute. If I'm taking it off a key level like yesterday's low and have risk to reward to the 50 EMA on the 15-minute chart.
I love that. I
So
love that.
if
Say
I'm
that. Wait.
looking-
Say that slower
Yeah,
because
so-
I don't want people to miss that. That was perfectly said. Say that again.
Okay. So the only time I'm ever trading in the incorrect shift. So if I'm trading long and we're in a downshift, and if I'm trading short and we're in an upshift, the only time I'll ever trade when the 15-minute shift is against me is when I have risk to reward to the 50 EMA on the 15-minute chart. That's the only time I'll ever trade when in an incorrect shift.
So like in this situation here, the only way, like, so for everybody that doesn't know this, the blue 50 EMA here on the 15-minute is the same thing as the dark blue 1 minute 800 EMA. It's very similar. So what you're saying is you would have looked for risk reward down here off this 800 EMA, even in the downshift, if the 50 EMA was maybe up here.
Was a bit higher.
Right, right. Because then you had plenty of space to move up to it. Right, exactly. And I think that there's something that we're going to prove, bro, over the next couple of months and years as we do more markups, that when you do take these trades, because I've got a bunch of them that are marked up like this, where you trade long from this level down here, let's say, in the downshift, you're buying it against it, it'll pop, make another lower high,
and pull right back down.
And pull right back down under the 50. Yep, exactly. Yep. Okay. Good.
So that's the only time I'll ever trade towards a 50. Other than that, I literally this last. I mean, and as I said, today was my first loss I've taken in 10 trades. So it's trading that correct shift has been so important for me these last 2 weeks since I've been back testing more, getting more markups on it. And what I've been doing that I found really, really cool is you can actually, because I'm always looking to, I grade myself quite an aggressive trader. Like I'm not scared to, like as you're talking now earlier on the chat, you're talking about the thinkers and the doers. I think I'm more like, I like to say I'm balanced, but I'm more of a doer. For me, that's my person. I'm more of a doer. So what I've actually also been doing is, we know that 50-minute shifts can pull back, and I've actually been stacking in on the pullback. So I'll hit it with my normal risk, and then I'll add a little bit on the pullback on the 1 minute with the L50 in the correct zone.
Same stop loss. I mean, same stop, right?
Yep,
not like a further
stop loss. Yep,
so it's even tighter on that second
just
entry
on the pullback.
Yeah.
Yep.
I think that that like shift pullback entry there, to me, that's probably one of my favorite entries, especially if we have the D1. The D1 will set up the divergence, lead into the shift. It'll pull back, hit that 1 minute 50 EMA. I can get a tight stop. Yep. I like tight stops. You know what I mean? As I think you and I are similar in that way. Like as we trade more, we realize the upside of these winning trades is almost unknown and unlimited, because you could trade a trade for 4 days, 5 days, 2 weeks, and it could keep carrying. So if you can identify the risk, that's all I need. I don't need to know where it's going to go exactly. I'm going to take profit as it moves.
Yeah.
You know, I just need to know the risk.
And also what I realized since being with you for almost 2 years now is that, as you say, the upside's unlimited. Like you see on Instagram, maybe us making like 25 pips, but they don't know how much we're risking. We could be risking 6 pips and that get 25. That's over 3 to 1. I mean,
that's 4 to 1. Yeah, that's beautiful. That's the money, bro.
Yeah,
4 to 1 is money.
Yeah, over 4 to 1.
I was doing.
Sorry,
I had
my strong point.
No, it's okay, bro. Me neither. I had a call with a guy yesterday, and I was talking to him, and I was just saying to him how because he was so focused on counting pips, and I was like, bro, your 50 pips that you're chasing after right now, I don't even need 50 pips, and I'm making more money than you. And I'm not saying that to be an asshole or brag. I'm like, just understand, like, the money isn't in the pips. The money is in your position size.
Yep.
And if you have controlled risk, you can risk 5 and make 15. That's a beautiful trade. 3 to 1, money, bro. Yeah. Money. So I think it's 100%. Always like it's about proper position sizing. So people are saying in the chat right now, they're saying, could we be looking to buy GA right here? But just if you guys are listening, like James was just saying, if you were to try to buy it here, because you've got that long bias, first, Notice the market sentiment line is in the sell zone right now. But on top of that, look at the EMAs in your way versus look at what James did yesterday off the trade here. What was in his way here when he went to buy it here? Nothing. Just Asia high. And that's where he got out. And that's where it stopped because he knows how to read these levels. Don't see this necessarily as making another level. This is respecting this level. That's all that was. It was a test of that level and it came off of it. So when James sees the upshift and he sees there's no EMAs in the way here, the next thing in the way is this Asia high. That's where you trade to. That's where you pull the trade, you get out. That's the way to trade, or at least lock your stop loss and take profit there, right? So now here, with all these EMAs in the way, how could you trade logically to call it a high probability? Of course, you can do whatever the fuck you want. You can click, you can do whatever. But how could you logically say that this is a high probability trade? Especially, look at all morning. Lower high, lower high, lower high. What are you going to do? Trade it to another lower high right here and then have it come low? No, bro. That doesn't. It's making lower lows too.
And and you don't even know where it's gonna, if it's gonna even reach that next level that you got drawn out there.
No, it doesn't have to, because guess what? If you just look at the 8 and 21 EMA, like you said, this shifted down.
It's a downshift.
It could pull back to the 21 and boom, keep going lower.
100%.
I know people, bro, that used to flip their charts upside down before they would take the trade, and it would help them. Literally, they would look like they would flip the chart upside. They take a picture of it and flip it in their Photoshop thing. You know what I'm saying? To see if it makes sense. Because if you flip this upside down, bro, I know it's hard. Everybody go stand upside down. But what is it doing? It's moving this way. Whoops.
Yep. 100%.
It's moving this way. So good. All right, that's good information, bro. Good information. Anybody have any questions for James?